Let's jump right into this explainer. We're looking at a week that's quite frankly gonna go down in history. June 1st through the 5th, 2026. This wasn't just your standard news cycle. No, this was the exact moment where the absolute mind-bending scale of AI slammed headfirst into the hard realities of economics, massive capital, and global regulation.
To really set the stakes here, listen to this quote directly from our source material. This was the week the promotional phase ended, the federal regulatory floor got rebuilt in 5 days, and Anthropic told the world the AI it is building is now building itself. I mean, that perfectly captures the absolute whiplash of those 5 days, right? We are officially out of the AI honeymoon phase, folks, and diving straight into a high-stakes era of brutal market mechanics and totally autonomous engineering.
So here's our roadmap to make sense of all this. Number 1, the era of free ends. Number 2, raising trillions for AI. Number 3, when AI builds itself. And number 4, rebuilding the regulatory floor. These 4 pillars are going to help us organize the chaos into a super clear narrative. Let's get into it.
Starting off with Section 1, the era of free ends, with the subtitle, The Cost Reckoning. Because, spoiler alert, the days of unlimited flat-rate access to frontier AI, yep, those are officially over. You know, it's actually fascinating how 2 completely disconnected events from the exact same Monday tell the identical story, just from completely opposite ends of the spectrum. On one side, you've got developers practically rebelling on GitHub's forums because GitHub Copilot killed its flat-rate subscription and switched to token-based billing. But then, on the exact same day, Anthropic files a confidential S-1 with the SEC showing off a massive $47 billion annualized revenue run rate, gearing up for what analysts think could be a $1 trillion IPO. So you have a micro-cost rebellion on one end and mega-capital formation on the other. But underneath it all, it's all about the staggering, astronomical cost of compute.
The real wake-up call is the actual cost, $30 to $40. That's the estimated cost of just one single long-agent coding session on a frontier model when it's chewing through a huge code base. And that right there is exactly why GitHub Copilot had to pull the plug on flat-rate billing. We're not just talking about simple tab completion anymore. AI is powering these massive, multi-file, multi-agent sessions that just devour compute. The flat-rate model couldn't survive that kind of math. It's kind of like walking into an all-you-can-eat buffet and then suddenly being told you're being charged by the individual noodle.
And that brings us to Section 2, Raising Trillions for AI. Subtitle, The Capital Structure Response. $84.75 billion. Just let that number sink in for a second. This isn't a company valuation we're talking about. This is the largest single equity raise in corporate history, and it was priced just this week by Alphabet.
When you break down Alphabet's master plan to support this, it's just staggering. We're talking a $30 billion public offering, a $40 billion at-the-market program, and, this is wild, a $10 billion private placement with Berkshire Hathaway. Greg Abel, Berkshire CEO, throwing down $10 billion on Google's AI infrastructure, especially when the stock was trading down, is a massive long-term conviction bet from one of the smartest capital allocators in the world. And why exactly are they raising a mountain of cash? Because Alphabet's full-year CapEx guidance, their capital expenditures, is up to $190 billion. No company has ever spent that much on CapEx in a single year, ever. To put that into perspective, they are taking roughly the entire GDP of New Zealand and pouring it directly into data centers and chips in a 12-month window.
And all the other tech giants are scrambling to secure their own positions too. Over at Microsoft Build, Satya Nadella made a point to disclose that Microsoft has been quietly building its own AI models totally independent of OpenAI. You've got MI Code 1 Flash already in production, MI Transcribe 1.5 is literally outperforming Gemini and OpenAI, and MI Image 2.5 is ranking above Gemini on the Arena leaderboard. For the very first time, Nadella proved that Microsoft's future doesn't entirely hinge on OpenAI's equity or their model quality. And let's be real, that's a very deliberate flex just weeks before OpenAI's own IPO.
Meanwhile, the public markets are about to get the ultimate test with the SpaceX IPO roadshow, codenamed Project Apex. They're going after a $1.75 trillion valuation at $135 a share. But here's where it gets really interesting. Their AI division posted a $6.35 billion operating loss in 2025, even while their Starlink business was crushing it, crossing 10 million subscribers. Every institutional investor, and definitely the bankers putting together the Anthropic and OpenAI offerings, are watching this like hawks. They need to figure out what kind of narrative the public markets will actually swallow at these historic multiples.
Moving on to Section 3, When AI Builds Itself, subtitled Autonomous Capabilities and Enterprise Sandboxing.
Because here's the thing,
We've talked about the eye-watering costs and the massive capital raises, but what is all this money actually buying? Well, according to Anthropic's new paper, When AI Builds Itself, the metrics are literally jaw-dropping. By May 2026, over 80% of the code merged into Anthropic's own codebase was written by their AI, Claude. Only 20% was written by actual human engineers. Think about that. The humans are essentially being outsourced by the AI they built. The AI is shipping 8 times more code per quarter than the human team did a few years ago. Basically, Claude is winning Employee of the Month every single month, no contest.
And the speed, the exponential jump here is wild. So there's a standard benchmark that asks an AI to optimize code so it runs faster. A highly skilled human engineer grinding for 4 to 5 hours can get about a 4x improvement. A year ago, Anthropic's Opus 4 hit 3x. Pretty good, right? But their new Mythos preview, as of April 2026, hit an absolutely unbelievable 52x improvement. 52x! It dwarfs human capabilities so completely that the authors of the paper actually called for a globally coordinated slowdown, a literal pause across all jurisdictions because the acceleration is just off the charts. But here is the ironic twist. While the creators of the massive frontier models are practically begging for a pause, the open source community and enterprise IT departments are just slamming their foot on the gas. Microsoft just rolled out execution containers, or MXC, giving enterprise IT the sandbox and auditing tools they desperately need to run AI agents safely. Throw in the new Copilot desktop app running multiple agents in parallel, plus rapid-fire updates from local stacks like Alama and LM Studio, and suddenly all the old deployment roadblocks are just gone. The local stack is just shipping, pause or no pause.
Which logically brings us to our final section, Section 4, Rebuilding the Regulatory Floor, subtitled The Empire Strikes Back.
With capabilities exploding and literal trillions flooding the zone, global governments didn't just sit around this week. They responded in real time. Look at the whiplash of these 14 days. Back on May 21st, tech lobbyists scored a massive win. They successfully killed a draft executive order that would have forced a 90-day voluntary review window for frontier models. They walked away, probably high-fiving. But then, between June 1st and June 5th, the entire global regulatory machine completely rebuilt itself. Their walkaway worked for a minute, but it almost instantly triggered a way more intense, multi-front crackdown.
It's what we're calling a full-blown regulatory matrix. The White House quietly pushed through a new executive order anyway. Sure, they cut the review to 30 days, but they kept the precedent and, crucially, added criminal enforcement authority. At almost the exact same time, Congress dropped this massive 269-page Great American AI Act. Its goal? To freeze state laws for 3 years while they build a federal framework. But the states clearly weren't waiting around. Vermont just flat-out banned therapy bots, and California and Illinois started ramming dozens of AI bills through. So, in a matter of days, the federal and state regulatory floors were completely rebuilt.
And this is not just an American phenomenon. Up north, Prime Minister Mark Carney rolled out Canada's AI for All national strategy. They're dropping $100 million just for a health sector data space, with plans for a massive public supercomputer. His reasoning was incredibly blunt. He basically said Canada can't afford to be completely reliant on foreign cloud providers. As he put it in the quote of the week, this is a strategy any sentient country is taking. We are looking at a full-on global arms race for sovereign compute.
So, what does this all mean for us? Well, the promotional era is officially dead and gone. The regulatory floor has been completely rebuilt from the ground up, and AI is out there optimizing its own code at 52 times the speed of a human engineer. Which leaves us with this one incredibly provocative question as we look ahead to Apple's WWDC next week. As the promotional era ends and the IPO wave kicks off right now with SpaceX, what narrative will the public markets actually price at these historic multiples? I guess we're going to find out really soon. Thanks so much for joining me on this explainer. Keep asking those big questions, and we'll catch you next time.